Welcome to the Trading Lounge and the day ahead report, and here we're looking at the S&P 500 on a daily chart, a bit squashed up there, but just to point out the old highs here and also up around the 1500 here. As WD Gann would say, double tops are never the end of a bull campaign, and our Elliott count suggests that, as we have been suggesting for a long time, that that new highs will be made. But you'd also have to acknowledge that there will be selling at these highs here, so it's just something that we have to navigate. And I've mentioned this before, but we're just edging a little bit closer to there, as you can see, at these prices here, and that would also be the same for the Dow Jones as well, in terms of its pattern here, just squashing it all up through here. So it's lagging slightly, the Dow over the S&P, but looking at also making new highs in due course. And this price here, the 1400 here, the 14,000 here is quite important really, in terms that, well, 144 would be, it's a number where Gann and Elliott meet. 1212 is 144 with Gann using his squares, and the Fibonacci sequence of numbers come to 144 as well. It's probably the only two numbers that meet in the first sort of sequence, but once again there's not a lot of difference between the two sets of numbers either, but it is a squarey number, and it is something that we need to acknowledge, I guess, in terms of price, and that would be leaving the S&P at 1500 and this one here just up above the 1400 there, but once again expecting new highs. But the main thing is that we need to navigate these old highs. In that we're looking at the Dow here on a CFD here, and the 13,800, the 800 here is a profit-taking number, and it's a minor level, the same as the 500 is, so 100, 200, 300, 500, 800, so we can expect a reasonable correction across here. And that would also match up with the particular wave count that we have approaching from this series here, the 1, 2, 3, 4, and looking for 5 waves in here, 4 wave 3 here, so we'll see wave 4 and wave 5 here. That would be the same for the S&P 500, looking for the top of wave 3 of 5 into the 1500 here. So once again we're tracking from wave 2 here. We've got 1, 2, and we've got 1, 2, 3, 4, 5 here for the third, the fourth, and the fifth wave moving up through here, which would be the 1, the 2, the 3 that we talked about yesterday, the 4 and the 5 moving up through here. If I see if I can just find that on a smaller chart here rather than 2 hour. So this is the we were looking at this here yesterday, I think, somewhere in amongst here. So we're looking at this as up for 1, back for 2, the third wave. The fourth wave is unfolding, normally pulls back to the fourth wave of 1 lesser degree, or 38.2. Looking for support on the 490, that's what we're looking for there. So from this point here, you'd be looking, if you're day trading this or scalping it, the same levels apply here. The 1, 2, 3 is group 1, so support on top of group 1 on these micro levels here. I'm just using this as an example as well for other markets, but support on top of group 1 here would see the price at the midpoint, which is the next level here of 5. So the chance to take profit, because you can expect a correction there, and then the following level would be 8. So once again, 1, 2, 3 for group 1, 5 the midpoint, 8 for profit taking, and the 8 is a profit taking number because it's the first even number before the next whole number. So as you know, traders think in whole numbers, even numbers, and lastly odd numbers, and that's why we put stocks always under the largest even number or whole number, and which is usually at odd numbers like 7. Yeah, so look, that's pretty much it. While those markets are doing that, we've got we've got the DAX here. Look at the European markets. I'll just look at the bigger picture here. This is the DAX here. We know that Once again, 800 in this case is profit taking. This is a corrective pattern through here. Once it's completed, it'll move to the upside. The euro, as you know, is also in a triangle as well. So if we have a look at the euro here, it's got a triangle pattern here as well. Once it's complete, we've got the D now, we've got the E now. So we should be heading, the E was further down here, but we should be heading back up through there. We'll have a closer look at that a little bit later. But also the German Bund as well is also in a triangle pattern here on the 4-hour chart. Once it's complete, bonds, stocks do the opposite, and stocks and yield will be doing the same. The dollar, and they'll sort of vibrate off one another. But once this triangle pattern here is finished, then we'll see further downside here. So once this occurs, we'll be seeing the dollar do the same as well, US dollar, and stock, the DAX, and the euro will see that push to the upside. So we're looking at all those markets sort of pulling and pushing off each other. So that's all fine there. If you're going to trade the DAX, of course, you'll be looking for support, tested support on the 72 number here, and adding on, scaling in through group 1 here, 10, 20, and 30, and looking for support on the 30. And then building a trade to the upside. It's not there yet, but coming there. The FTSE as well will be looking at. You'll be looking at swings across the 62 here, and the normal thing is that this 62 will be the balance line. This group 2 here, 65, 72, and 80 will be was obviously the resistance, and now that will become the support. And the resistance up here will be group 1, so 10, 20, and 30. So group 1 its job is to hold the price to the closest largest number, and group 2 is to also hold it the closest largest number. So the first fluctuating range will be in this range here. So it's not good. It's not a good trading environment. You're better off waiting for the correction to unfold, mature, and then start looking to move in through there. So speaking of group 1 and group 2, the same thing for the ASX 200, with the 48 there as profit taking, and group 1 above and group 2 below. Not a good trading environment. Trade less, use shorter trading ranges. Just scalp the whole numbers to each 10 points, but it's difficult to get 10 points, so normally 7, so risking 3 to get 7 is a reasonable sort of ratio to start with. Okay, let's have a look at some of the drivers in terms of precious and base metal. Okay, the copper market is, as you know, we were tracking yesterday. We were looking for a little high up here of 5 waves up, the 1, 2, 3, 4, 5. And that's playing out quite nicely. We should see this move back down to the lower level of subgroup 2, the 365 area, and finding support there. It may even come down to the trend line here, but we'll be looking at, that could be changed now, looking at the 61.8 retracement level from the top of that impulse wave there. So we'll be looking for, brings it in around just below here actually, the 364. So anyway, let's just see that play out there. Obviously that's going to affect stock, and and that's sort of another thing as well, is that in the bullish weekly cycle, especially for Australia anyway, is that we can see Wednesday being a sort of V-shaped day, opening low in the morning, closing higher in the afternoon. Thursday can be the bear day, as you know, opening higher and then closing lower for the day. But if it's closing lower for the day, then we'll be looking for a market that's moving down but on lower volume. If it's moving down on lower volume, then we know it's just corrective. If it's got increasing volume to the downside, then we know we've got more to follow through on that. So the gold market, we were counting, this is a little ABC here. I was looking for a high above this one here. We do have a little 5-wave structure in here. Once again, overlapping wave structures, which is a bit of a no-no. But anyway, we know that there's trend trend channels resistance through here. If I can just find that up through here. So we know that was there. We know the 1700 was there. This move up through here can be counted as a corrective wave. It can also be counted as an impulse wave as well. It's just a little bit iffy, so we're unsure about that. So we just needed to play out. We knew that there was obviously resistance here. There will be some sort of reaction here. That's what we're seeing at the moment, and we just need to allow that to play out. Now, to play out, at the moment it's down in 3 waves here. It can come down here a bit further. Obviously, the demand support here at 1680. This is all group 2 here, 65.72 on the 80. So if this just moves down in A, B, and a C down to here, then we've got a 3-wave correction. If it continues to move down in 5 waves, then we will get another 5 down. So we'd be looking at the 1 here, 2, 3, 4, 5. If we get that, then we'll get an A and a B and a C here, and then we'll get another 5 waves to the downside here. So this would be it will come further down through here. At that be, if we get 5 here, then we get 3 here, and we get another 5 down here. Simple as that. So we need to see if we get the 5 here. If we do get 5 here, then when we get this 3 wave here, then that will give us the shorting opportunity once this counter trend has been done here. So it's, you're not missing anything. So it's not good to chase something into. I don't particularly like trading the first leg down in anything, because this is going to come back and bite you anyway the time it makes its move, unless you're really trading it tightly through here. So yeah, the oil market as well, it's just fallen out of bed quite quickly here in the last sort of wee while. We understood that we were looking for a top in the oil market here, and obviously that it's come in. We were looking at we knew 96.50 that would be seeing a corrective pattern across, but also we had our targets there. If you look at the 4-hour chart and so forth, that just above this, around the 9 where we are here basically. So that's all played out sort of quite nicely. This has just happened while I've been writing the report, so I haven't seen the headline news for this here, but the 95 will offer some short-term support here, but yeah, still got more to play out there. So wave 3, wave 4, and wave 5 up through to here. So we just have to allow this to play. This would obviously be a 3rd wave down through here. So there will be a 4th wave here, and then a little 5th wave through here. Once we've got 5 waves here, as I just explained in oil, then we'll be looking at a counter trend of 3 waves here. So and then another 5 down. So that's what we'll be looking for there. Alrighty, let's have a look at the FX market. Okay, looking at the US dollar here, the couple of points here is that the 80 is the line in the sand, and we need that as the resistance, not as support. Once that becomes the resistance, the tested resistance, then we would be seeing the euro push to the upside, and all currencies that align with that. But at the moment, we can still expect another high to come in, because this is a corrective pattern here, and we should see a new high above here. So we just need to allow that to play out. The other point is that in a bit of an odd way in terms of pattern recognition as well, we've got 3 patterns here that are quite similar, so just different sizes, but they're expanding to the upside. So, and this market is still expanding to the upside. And what I mean by that is that this little pattern here, the little move up through here, then this little corrective pattern down here is just a repeating pattern of the next move up. So this move up through here, and then this little correction here would be the same as this little guy in here, slightly different, and then this one up here, and then this one here. So we're seeing 3 degrees of an expanding trend to the upside. So until that changes, then this market is still to the upside, and that doesn't sort of help the case with the euro as such as well, because that needs to change footing and move to the upside as well at the 133. So Two things here. We can see that this is expanding to the upside. It hasn't changed footing yet. We are expecting another high here because we've got a corrective pattern here. So yeah, just more patience is required. As I showed you the triangle patterns in the euro before, and the DAX and the Bund as well. So they're all going through, but they're sort of they're getting closer to their finishing points as well. So this is the euro here in a triangle. I know it's a bit messy, but it's all there: an A and a B and a C, and now a D and an E. So we can have the finish here in the euro. But maybe not so on the other one. But the positive point here is that we're above the 133. We need to see, if we just have a look at a closer picture of this, if I've got one here, just bear with me for a second until I find one. That's not the one. Okay, right, so it's just a 2-minute chart here, but I just wanted to point out that, you know, if this is the bottom of the triangle here, then just looking at this last move down through here, which is in 3 waves here to make the E wave here, this low here is important because this would be like an A wave and a B wave and a C wave to make the E wave down here. So once this market here moves further up here, say support on the 133.20, then it will be overlapping this structure here of this move down through here. So that would make that a sort of corrective pattern. So if I just explain that in terms of, if we've got, don't worry about the numbers, I'm just looking at this. So if we've got a move down through here, as such, we've got here, which would be this move here as such. This could turn into 5 waves in terms of 1, 2, 3, 4 and 5 here, right? But if this wave 4 here, if this wave 4, not very good at using these tools here, if this wave 4 here moves back up into the price territory wave 1 here, then it's more like we've got a corrective pattern in terms of an A and a B and a C here. So that move up through here, which would be this move up through here, overlapping this here, starts to give us a positive view on this uptrend here. So the reason I'm saying this for too is because it does appear that we're starting to get a impulse wave up through here. So scaling in, once we got support, say on 133 here, the top of group 1, the 10, 20 and 30, that would sort of help confirm that. But once again, we'd be looking for 5 waves up through here, and then an A and a B and a C coming back through here, which would be 5 waves up, 3 waves back, which is 8 waves, which is called a motive wave, and then we'll be looking for the setup to the upside, and that's what we'll be tracking next. So just keep a bit of an eye on that. The Australian dollar, been a little bit of a hiccup in the currency markets, but it should settle back down now. So once again, we're looking for support on the midpoint here, the 105.50, and if that can develop, then we've got our trade to the long side, because we're tracking the 5-wave structure to the upside here, an impulse wave. I'll just see if we've got that on a smaller scale here. It's 1 hour chart here. So once again, if and only if we get support on the 105.50, then you can look for long trades there. Once again, we've got this, just as I'll explain before, see how we've got this 3-wave structure to the downside, and this move here moves up and overlaps this one here. So that is a positive move to the upside. So, but we still need to confirm that. We want support on the midpoint, the 5. 5 is the second strongest number in the market. 1 is first. 5 is the next number, followed by 8, then 3. So that support there is critical and is part of the setup for the long trades there. Of course, group 2 here is going to give you a bit of a resistance here as well, but because we got that 3 waves there, it should dictate to us that we'll get higher ground eventually through here. So it's just a matter of waiting for the setup there. All right, well, that's it. As I mentioned before, in the bullish weekly cycle for the Australian opening, Thursday can tend to open high and then trade lower through the day. And that would probably come from the Dow futures in the night market touching on the 13,800 and the S&P 500 moving closer up towards the 1,500 as well. So we can expect some sort of sell-off there. So just bear that in mind. But if the sell-off is on low volume, then we can expect Friday and Monday to be up. So that's what we'll be looking forward to. Alrighty, well, good morning, good luck, and enjoy the day ahead.